Morning and welcome to this Thursday, April 8th session of the Small Business Bootcamp. My name is Faith Ritchie and I am the Small Business Programs Manager here at the Arizona Commerce Authority, filling in for your usual host, Small Business Ombudsman and Vice President of Small Business Services, Robert Theobald. Throughout the month of April, key organizations across the state of Arizona have teamed up to shine a spotlight on our resilient small businesses and entrepreneurial community. This session, along with others throughout this month, are a part of many other digital events happening as a part of Startup Together AZ. Through Startup Together AZ, you can join thousands of diverse entrepreneurs all month long to learn, connect, and be inspired by the innovation and creativity of our state. I wanted to start off by saying that first, for those of you who are new and for those of you who are returners, we always start our boot camps with the thanks to our amazing community partners. Without them and their volunteer time and expertise for over 40 weeks, we would not be able to provide the content and information we have been able to our small biz community through the COVID-19 pandemic. The ACA Small Business Bootcamp is designed to help prepare small businesses of less than 20 employees emerge from the COVID crisis stronger than ever. Now, as you're aware, we are more into a year of the COVID crisis, and we continue to deliver this content as it's important to the community. It's a statewide initiative supported by our amazing community partners that we displayed on our first two slides, as well as a resource collective. Our over 40 weeks of bootcamp sessions have been recorded and are available to view. You can also register for some of our other upcoming sessions as well at the link provided. In addition to those recorded sessions, we also have relied on our partners to share additional resources available through the pandemic, available here at our Small Business Bootcamp Resource Collective. This is the collection of various different industries as well as mitigation measures. And so we encourage you to check this out if you have not yet. We also know that as mitigation measures continue to evolve, we want to make sure that you are staying on top of the most up-to-date information. And that is shared on our website through /COVID-19. In addition to today's session, which we'll talk about getting started, we wanted to pay a special spotlight to the different programs ACA has available for small businesses. So whether you are navigating starting your small business, identifying workforce, or identifying manufacturing needs, we recommend that you visit our ACA website to see what resources are available to you and your needs. In addition to starting a business, we also recommend you check out our small business checklist. This is an interactive online tool that will help you navigate the local and statewide permitting and licensing information. And last but not least, for all of the up-to-date COVID information and resources, we recommend visiting arizonatogether.org. Now for some financial updates. These are updates that we have continued to cover throughout the pandemic, and we want to make special note that today the Shuttered Venue Operators Grant is open. So if that is something that you and your business have looked into and qualify for, please be aware that that application is now open for submission. In addition to the links provided for restaurant revitalization update, as well as PPP extension, you can visit those links that are also in the chat. And as mentioned at the start of this webinar, our Startup Together AZ content and activities are all listed and available for registration through the Startup Together AZ link. Here is a look at our upcoming sessions for next week and the following week. So we want to make sure that you are aware of all of the amazing content available for free through this bootcamp series. So whether you are starting to look at marketing efforts Or if you're creating a brand, you want to see those results from marketing, we're really going to be focusing on that piece. So again, please visit that bootcamp website and register for these upcoming sessions. Now, today, to help us understand how to start your small business in Arizona, we are joined by Scott Ladin, a certified SCORE mentor with the Greater Phoenix region. Scott is a global marketing and business development professional with over 35 years experience across early stage to Fortune companies. We are excited to have him spend his morning time with us and to provide this great content to our small business community. So I will stop sharing my screen, and Scott, I will turn the time over to you.
Thank you, Faith. Much appreciated, and appreciate the introduction. Hope everybody is seeing my screen. We looking good?
It looks great.
All right.
Yep.
All right. So thanks, Faith. Thanks, everyone, for joining. Before we get started, just a quick overview on SCORE. SCORE is a resource partner with the Small Business Administration. And not only do we do workshops on behalf of hosts like the ACA, but we also provide a variety of other workshops across every different business discipline you can think of. There are over 300 chapters of SCORE throughout the country, and about approximately 10,000 different mentors like myself, again, across all of these different business disciplines. We will probably be offering in the next several months workshops that are focused on each of the different areas of business startup that I'll be talking about today. So please feel free to reach out to the greaterphoenix.score.org website and check out the resources and the webinars that we offer. So what will we be covering today? Let me just make a slight adjustment on my screen here. There we go. Perfect. So we're going to cover a broad range of topics that are implicit in starting a business and giving you some idea of what's involved in starting it up. So the first question that you want to ask yourself is owning a business the right thing for you? And we'll talk about some of the pros and cons along that line. And we'll talk about some of the different options, ways in which you can get into business. We'll talk about the legal aspects or the ways in which you can organize your business legally. We'll talk about a business planning model, I should say, that I love to work through with my clients. It's called a business model canvas, and it's a great tool. I encourage anyone starting a business to take advantage of that. We'll talk about financials and funding, ways to get clarity around what it's going to cost to start and run your business. And then one of the things that often gets put on the sidelines when we're thinking about starting a business is marketing. What do we need to do to market our business? Just a quick disclaimer, I am not an accountant, I am not a CPA, I'm not a lawyer. So if we have technical questions along those lines, I'll likely refer you back to those professionals to get the answers, but we'll let you know depending upon the questions. And I don't recall Faith mentioned, but we will take questions along the way. So please key them into the Q&A box, not the chat, but the Q&A. And that way, Lisa will let me know when we have a question for focus. So thank you much. And let's get started with, is owning a business right for you? So there's some myths and some realities that we kind of need to focus on before we get started. Oftentimes an entrepreneur will think that if they own a business, they're not going to have to work so hard or put in long hours. And let me really quickly dispel that myth. My wife owned a stationary gift store for 30 years, and I can honestly tell you that she would eat, sleep, and breathe that business. And almost every business owner I talk with identifies with their business. So yeah, you're going to work hard. It's not a 9-to-5 gig because you're responsible for everything from soup to nuts. My product and service is unique and there's no competition. If you're lucky and if you're an innovator, you may have a window of opportunity where there is no competition for whatever product or service you're selling. But at the end of the day, there's always going to be competition. And you, as a business owner, are responsible for knowing what that competition is and knowing how to continue to differentiate yourself in the marketplace so that people will come to buy your product or service rather than your competition's product or service. Social security taxes. If you own a business, you won't pay social security taxes. No, not true. Unfortunately, death and taxes are the realities of the world we live in. So you will pay social security taxes. Self-employment taxes 15.3%. Social security accounts for 12.4%, and the balance accounts for Medicare. So no, you can't escape these kinds of things. As a business owner, I can expense everything. Well, not really. There are lots of things you can expense, but things that you certainly can't expense. So I always encourage my clients to sit down with their accountants and CPA and understand what they can and cannot expense. And it's going to vary dependent upon what your business is. But no, you can't expense everything. Business owners get to do what they want to do. Well, referring back to my wife's business, she was the sole owner. So, having a time to, spend with the family, having time to take vacations, these were difficult decisions that had to be made. Owning a business, bottom line, is a 24/7 lifestyle. And the challenge that every business owner has is finding a balance between work life and personal life. So my point here is to help you go into these things with your eyes open. But it all starts with having that great idea. What is it that you are doing for your customers, right? Every idea, every new business needs to focus on either solving a problem, fulfilling a need, or addressing a want that a customer has, an end customer has, whether it's selling an ice cream cone or manufacturing product of some kind. You really need to understand who you're selling to, who you're marketing to, and why they're going to buy from you. Everybody has challenges that they're going to face daily. Every customer has questions that they face daily. Your challenge as a business owner is to ask and understand what keeps that customer up at night. What do they worry about? What are their issues? What are their challenges? And then how are you going to solve those problems? How are you going to address those needs? So, an ice cream cone fulfills the need for a sweet dessert on a hot day. And an automobile fulfills a need for transportation. Those needs and wants are very clear, but sometimes it's not so clear. And when we take the time to do our due diligence and think about it clearly, we get a better understanding of how to message that solution, that product, that service, so that it is clear to the potential buyer how they're benefiting from the product or service that you're offering. So having an idea is great, and understanding that you're in a competitive world is important. But when it comes down to it, are you ready to be in business, right? Success requires your ability to do so many different things as a business owner. And here's just a list of some of the things that you might want to consider. Bottom line is you're going to set the tone for your employees, and you're going to set the tone for your business. So the way in which your business is perceived by both of those groups is really going to depend on your leadership and your way of messaging and positioning yourself within the company and outside the company. So look at all of these things. Do some really hard introspection. Look inside and ask yourself, do you have the work ethic that it requires? Do you have the management and personnel skills? Can you make decisions quickly? Are you organized? What's your family think about what you're doing, right? The bottom line is, can you translate the passion and the values that you have for your business into long-term success? So these are hard questions to answer. I'll give you an example. I had a client come to me several years ago who wanted to start a restaurant business. And I said to her, have you worked in the business before? No, I haven't. Have you taken any classes or done any study related to the business, to the restaurant or the hospitality business? No, I haven't. Well, why do you want to start a business? Well, because I love to cook and I love to see people smile when they enjoy my food. And I said to her, that's great, but it's not necessarily a business. My recommendation to her was to go work in the business, start out at a restaurant and work the front, work the back, work the middle, understand all of the different aspects of the business, understand the financials. You can't just jump in. You really need to look inside yourself and see what your capabilities are, what your knowledge is. And as I say to my clients often, when we get into these kinds of analyses, is you want to look at the deep end of the pool and make sure you can see the bottom before you jump in. So that's kind of the questions that you want to begin asking yourselves, and they're not easy, but once you get to a point where you feel comfortable that, yeah, you're ready to jump into that pool, what are some of the different ways in which you can do that? Well, we can start with starting a brand new business from the ground up, right? What's the pros of that? Well, you're not hampered by any previous image of the business and any equipment that exists in the business. So you're starting from ground zero, and you can choose your own name, your location, your logo, and build your business relationships all by yourself. Relationships, with customers, with suppliers, partners, and so on. And you can explore new markets and directions at will. That's your prerogative. In fact, that's your directive as a business owner. We talked about competition a moment ago, right? So new markets, new directions help you stay competitive. Now, all of that said, on the other side of the coin is you have no existing customer base to build on. You may have no partner relationships or resources to get off the ground. So you're really starting what we call a greenfield, right? And you're taking a risk, bigger risk than if you were buying a business or a franchise, which we'll talk about in a couple of minutes. But you're taking a risk because you have no foundation upon which to build. Now, that said, a good analytical approach to the costs and the benefits and the profitability of your business will help you to forecast and perhaps mitigate that risk. But at the end of the day, there is risk. And because your business has no track record, it may be very difficult to find financing. Certainly organizations like the SBA and other organizations that offer grants can assist with that. But it's all really going to depend on your ability to present a viable, strong business plan. Now, having said all that, let me just give you some stats on new business startups. And that is that 75% of new businesses are going to fail within 2 years. 90% are going to fail within 5, and 95% will fail within 10. That's just the reality. Why do businesses fail? Bottom line, I should say, is because they can't supply enough top line. They can't generate the sales that are needed to drive the business beyond the expenses that the business will occur. Infrastructure problems, marketing initiatives, all of these things are necessary to ensure that businesses succeed. And so at the end of the day, the risk is there. You just have to understand what you're getting into and model it to the degree that you have confidence in your capacity to succeed. So that's kind of starting from the ground up. The other option is to buy an existing business. I recently had a client who bought a business from someone with whom he had been doing business for a number of years. He spent a great deal of time looking through the financials and talking about the relationship with the seller post sale, and I believe it's going to be a very successful approach. He was able to gain the benefit of an established customer base, the location, and the seller helped him to build relationships with the suppliers. It was a known business, right, with a proven formula, name recognition in the Valley. And so, again, helps to ensure that long-term success will continue. I mentioned briefly about the financials. Yes, you absolutely can and should review the business's records before buying them to make sure that it is profitable, to make sure that there aren't any misrepresentations of the financials. So reach out to your own accountant, your own CPA, and have them go over the books And if there's any reluctance from the seller to give you the books, that's a red flag. Now, because the business has a track record, it may be easier to obtain financing. And in the case of this particular client, he and the seller went to the bank with whom the seller had been doing business for many, many years. The bank knew the business, and the bank was willing to underpin the buyer's down payment. So, an existing business with a good track record will have more success in finding funding to get it off the ground. Now, the other side of that coin, as I kind of alluded to, is that there could be problems and misrepresentations of profitability. So doing that due diligence, working with your professionals, the lawyers and the accountants in your life will help tremendously. Be sure that the business has a good reputation. How do you find out? Well, you talk to the customers, you talk to the employees, you talk to the suppliers, and so on. Check out the inventory, depending upon what your market is for the particular product. Product inventory can become obsolete, particularly in the clothing industry, for example. Clothing is very seasonal, as most of you know. So if you're buying a retail business, you want to be careful that whatever you're buying is going to be sellable in the coming months. There may be some loyalty issues, right? Employees or customers may be loyal to the former owner, and that could cause some challenges for you as the new owner to create new relationships. And the very last point there is there's no guarantee that past success will continue under your ownership. But if you do your due diligence and make the effort to do your research and the outreach necessary, again, you'll mitigate your risk as best as you can. The third way to get into business is to buy a franchise. And in the Phoenix area, you have the benefit of a gentleman named Kent Craven, who is probably one of the best known franchise consultants in the industry. I left a URL up there to reach out to him. Kent Craven is great. He does a number of workshops through SCORE as well, so keep your eyes open for those. But as a franchisee, you are now part of a system with a well-known image and proven products and services. I'm sure many of you can think of franchises that you've seen, everything from the McDonald's to the Burger Kings of the world, and the different hardware stores, Ace Hardware, and so many others. And you get a marketing and sales support from the franchisor behind you. We've all seen the TV ads for all of these different brands. And you get training and you get guidance from the franchisor. And you're part of a network. One of my clients owns a couple of massage franchises in the Valley. And she gets together on a monthly basis with other franchise owners, and they discuss issues and challenges, opportunities, and a variety of other things. But there's help and there's support among the group. And because a franchise has typically a good background, it's often somewhat easier to get the financing you need to start up the franchise. Now, on the other side of the coin, again, you're limited to the rules and regs that the franchisor states, right? You're an independent business owner, but you're still limited to what the guidelines are from your franchisor. And you're going to pay them some royalties and other fees, right? These are going to come right out of your gross margin, right out of your profits, but you have to know what those are. You're going to sign something called an FDD, a financial disclosure document, which is a very thick document that describes all of the details surrounding the franchise that you might be interested in acquiring, right? So it's going to talk about what your obligations are and what your rights are, and it's going to talk about those same rights and obligations that the franchisor will have. This is a document, again, I encourage you to meet with your professionals, your accountants, CPAs, and lawyers, and have them work through it. Don't just assume that it's going to be beneficial to you, because quite often it's more beneficial to the franchisor. So you want to double check it, make sure you understand the rules and regulations that you're getting into. And if for some reason the franchisor gets into difficulty, those difficulties are going to roll downhill, and they'll become your problems as well. Frank, I can't think of any examples of those situations, but again, if you understand the rules and regs, when bad stuff happens, you'll understand what outs you might have under certain situations. So those are the three different ways to jump into the business. But regardless of whether you start from scratch, buy a business, or buy into a franchise, there are certain skills that you have to have, or someone has to have, in the operating of the business. So I mentioned earlier, introspection on your personal attributes. Here's some introspection relative to your personal business skills, right? So, do you have accounting and bookkeeping expertise? If you don't, then you need to hire that service. What's your sales skill like? If you're not a good salesman, if you're not good at negotiation, perhaps you need to hire a sales team. If you're not an IT expert, and God knows we've spent enough time playing with our technology the last 12 to 15 months. If you're not an IT expert, you need to have someone on board or accessible to you who can deal with your networking events, making sure your cameras work on your PCs and so on and so forth. If you're buying into or building a manufacturing facility, how are you going to negotiate that lease? Are you experienced in lease negotiations? Are you experienced in location research? So bottom line to all of this is, if you don't have these skills, and there may be others that are necessary for your particular business, you're going to have to find them. And those skills come at a price. And so those have to be built into your profit and loss analysis and your cash flow statements. So again, you got to figure out what you can and what you can't do, and how you're going to get access to those kinds of capabilities. Now, I kind of alluded to this over the past few minutes, but let me talk about the four people that are probably going to be the most important people in your life if you do own a business, I should say, in your business life. So we'll start with the banker. When you start a business, you are going to have to open up some banking accounts. I typically recommend my clients open up two, one for operating cash flow and one for sales tax. At the end of the day, you don't want to be caught short-handed when taxes are due and find out you don't have enough cash to cover your obligations for sales tax. So you want to have a banker, and you want to have a relationship with someone at the bank. I encourage, again, my clients to not always go to the drive-up window, but to go into the branch, and of course, make sure you have your face mask on these days. But go into the branch and say hello to the tellers, to the platform officers, and anyone else, because you need to have a relationship with these people in such a way that when you need, for example, a letter of credit or a HELOC loan, for example, line of credit, you're going to want folks who will advocate on your behalf. And boy, I'll tell you, that hasn't been more true than these days, when folks have had to apply for PPP or EIDL resources, because the bankers, the folks that you have relationships with, will be the ones that will advocate on your behalf, and will give you if you have the relationship, you have a better probability of getting access to those resources than if you're just walking in cold to some financing institution. So build a relationship with your banker. I mentioned this several times, your accountant. Every business needs to have an accounting discipline. I often suggest my clients they research and perhaps sign up with QuickBooks or some other software platform like that, and then sit down with their accountant to structure the accounts, right? So your general ledger, your chart of accounts, make sure that you and your accountant agree on what those buckets look like, so that, again, when it comes time to do your tax reports, the accountant knows where to get the reports and knows where the information is, because accountants, just like lawyers, they only sell one thing: time. And so the less time you have to pay for, the more beneficial it's going to be to your bottom line. So if you can get a good accounting discipline set up with your accountant, it'll just facilitate the dialogue and the conversation as you go through your business operations. Insurance agent. You always need to be clear on what coverage is necessary for your type of business. If you're a consultant, your business insurance coverage is going to be a lot different than if you have a construction company. Your liability will be different. So again, sit down with a broker, with an agent, preferably one who knows your particular kind of business, because they can recommend then the kinds of coverage that you will need to protect yourself and perhaps your family when bad stuff happens, because bad stuff happens. It's just the rule of the game. And so your attorney, your lawyer, these are the four people. BAIL, if you have these in your life, you will stay out of JAIL for all intents and purposes, right? So your attorneys will work with you to establish buyer agreements, supplier agreements, contracts with customers. You can find a lot of information online. Organizations like LegalZoom and so forth provide a plethora of information. That's all well and good. My recommendation is find an attorney that you can sit down and have a conversation with. Yes, it'll cost you more potentially than finding online resources. But at the end of the day, you'll have someone with whom you'll have a relationship, someone who knows you and your business, and they can ensure that whatever documents you need to create are done in such a way that they're fair and relevant to the way in which your business needs to be run and protected. And lastly, don't forget your SCORE business mentor, and I'll also add to that our hosts at ACA. You don't want to do any of this in isolation. And working with a mentor and someone from the ACA, for example, you can get tremendous insights. There's one of my favorite phrases is, "I don't know what I don't know." And so working with folks like a SCORE mentor or the folks at the ACA can kind of fill in those blanks. I'm risk averse, and any way I can find to mitigate the risk in anything that I do, I do. And I'm quite happy to acknowledge to myself that there's stuff I don't know. So I try to find the experts who do know those kinds of things. All right, so talked a little bit about some of the options to get started. We've talked about our attributes and we've talked about some of the more important people to have in our lives. We'll talk a little bit about some of the organizational aspects. So the quickest way to get into business or set up your business is through a DBA, right? It's called doing business as. It essentially puts your name on public record and prevents someone else from registering that name with the Arizona Secretary of State. And that's who issues it. And I believe the cost for doing that is $10. Now, it doesn't mean that someone else can't use your name, but if you needed to defend it, you've got it registered. And so that's really the key here. TPT, the transaction privilege tax. This is something that Arizona charges for the privilege of doing business in the state. It's sort of a tax on the vendor for doing business, and it's assessed by the Department of Revenue in Arizona. Last I looked, there was a state fee of $12, and then it varied by city from $0 to $50. Again, ACA provides some great information and detail on all of that. Not every product or service requires a TPT license or a tax. Again, ACA is great to provide you with the detail, and you can see on their checklist, there's a link, I believe, to more information on the TPT, and you can test and determine whether your business is needs to be charged that. You will need an EIN, an employer identification number. I mentioned earlier the bank accounts. So you'll want this EIN to be used instead of your social security number. And this will be used to open your checking account, get your business license, filing your taxes, and so on. It's free and it's offered by the IRS. I will caution you, there are companies out there that will happily take your money to file for the EIN. You don't need to do that. It's fairly easy to find on the IRS website. I had a client recently paid almost $200 to someone to set up their EIN. You don't need to do that. You can do it yourself. So that's kind of the starting point. for getting a business off the ground from that perspective. The next question you're going to ask yourself is, what is my organizational structure going to look like? And so with a small business, it's typically one of these three. You could be a sole proprietorship. You own and operate the business, or it could be a partner, right? One or more people own the business, and it's taxed just once, but you are personally liable. So when the bad stuff happens, you will be the one that gets sued, for example, right? So you are personally liable. Now, the limited liability company does just that. It creates a separation of assets, personal assets versus business assets, right? So when the bad stuff happens, then it's going to be the LLC that is liable as opposed to you individually. Now, I will caution you again, when you set up a contract with someone, be sure it's in the name of the LLC and not your name, right? Because if it is your name, for example, again, you can be liable for any implications associated with the contract. So make sure that the LLC is on the legal documents. Again, the taxes are passed through to the owners of the business. And if you have multiple owners or members, I should say, of the LLC, make sure there's a written agreement. So everyone knows what their position in the business is, the relative percentage of interest that they have, what their roles and responsibilities are. So you want to be sure that that documentation is in place when you set up an LLC. Now, the other one that we typically see in small business is called an S Corp. Again, it limits the liability. Again, losses are personally taxed as are earnings, but there's more regulation around setting up an S Corp, and there may be some restrictions to capital raising. So bottom line, I think you'll find that in most cases, the limited liability company is the right structure for a small business, but it's a conversation you need to have with your attorney and with your accountant to get their guidance on what's right for the business that you're setting up. Okay, so protection of trademarks and names and so on and so forth. Here's a list of different resources that are available to you. You want to go out and you want to search the availability of the name you choose for your business. So you can go to the US Patent and Trademark Office. You could go to the Arizona Secretary of State website. There's some great information out there. I put a link at the bottom here for a PDF document that pretty much is the Bible on trade names in Arizona. So good resource there. You'll want to research your domain name as well. Here's a link. And then if you're going to trademark any of your names, again, you want to go through the USPTO and the Arizona Secretary of State. One other point I would make is that you also want to protect your intellectual property appropriately. And again, you need an attorney to help you ensure that you do that properly. But things like copyrights, digital rights, and so on are important to pay attention to these days. Online content, digital art. If you hire a web designer to build your website and you provide that web designer with content, you want to be sure you own that content, and that web designer can deliver that content and the website to you should you need to change hosting companies, for example. So you want to make sure that you own all the intellectual property that you feel is duly yours. So again, talk with an attorney that understands the aspects of intellectual property, particularly as it relates to your business. Another key area when we talk about starting a business is the aspect of employees, right? And what's involved in having people working for you. You can have direct hires, and you can have contractors, and you can have consultants. Those are distinctly different categories of employees. But at the end of the day, having good documentation in place, having job descriptions, clarity on compensation, ways in which to measure and monitor performance and coach. If you haven't already, I talked about QuickBooks earlier, find a payroll processor. Companies like Paychex or ADP all have small business components to their organizations and can work with a small business to get payroll systems up and running. Um, if you're working with migrants or immigrants and so on and so forth, you want to be sure that there are the appropriate eligibility documentation is in place. Workers' compensation is something that you want to consider depending upon the nature of your business. Look at all labor and legal requirements, sick time, minimum wage, so on and so forth. Bottom line, this is one of those areas where if you don't have the expertise, this is an area where you want to buy that expertise from someone like a Paychex or an ADP, because beyond just the payroll processing, they understand the whole aspect of human resources management and planning. Don't underestimate the importance of getting your HR needs correct. You don't want to find yourself at the other end of a table having a conversation over things like compensation, termination, and so on and so forth. It's also very important, I'm sure you've heard in the news over the last couple of years, differentiating between a full-time employee and a contractor. There are rules and regs that the IRS has identified that helps you to designate what an employee versus a contractor is. There's a link there to the IRS website. Make sure you understand that. Make sure that you're accounting for the appropriate taxes and benefits that may be needed to apply to those different categories. All right. Let's see, we talked about insurance. Let's talk a little bit more about it. This is just a few of the different kinds of things that you want to cover in your business. The things you'll want to discuss with your insurance agent and your broker. Property, liability, workers' comp, so on and so forth. All of this is going to depend and vary based on the business type that you have. But this is just a starting point for you to consider when you meet with your insurance agent, insurance broker, and perhaps even your lawyer and an accountant as you go forward. So think about what your business needs. Think about the relationships that you have within the context of your business, and that's both customers and employees, and see what kind of coverage that you might need to ensure that when the bad stuff happens, you're adequately protected. All right, this is more of one of my favorite topics here, the business planning side of things. So if you're not going to get financing, if you're not going to ask someone to finance your business, you're not going to get a loan or a grant or something to that effect, you may not need a 30 or 40 page business plan. This is a great tool, this thing called the Business Model Canvas, and it's literally this one page document that you can create. I've had clients do this on a big piece of poster board with Post-it notes, and I've had clients do it on a whiteboard where they mark up, with dry erase. And I've had people do it in Excel, PowerPoint, and so on and so forth. Bottom line here is that it's a tool to help you think through your business from an operating perspective, right? And we're focused on value, the whole concept of value. I alluded to that in the beginning when I talked about the idea that you need to have. So your goal here in business, number one, is to make money. And you're going to do that through either creating value and delivering value and capturing value, right? So where do you start in this process? Well, we go back to that earlier slide that says, what is it that you do better, cheaper, or faster than your competition that helps your customers do what they do better, cheaper, or faster for their customers? Or what problems are you solving? What needs are you addressing? What wants are you fulfilling? You go through that process of understanding how to create the value, and then you think through in detail from an operational perspective, what are you going to do to deliver that value? Simply speaking about an ice cream cone, how do you deliver that value? Well, you have to buy the ice cream, you have to buy the cone, you have to buy the napkins, right? You have to buy the spoons, and then you have to pay somebody to serve that up to the customer, and then you have to pay somebody to clean and maintain the facility. So these are things you have to do. And so you're doing that with help. You're not doing it by yourself. You have a supplier that provides you with the different components that you need to build that ice cream cone and service the customer. What is it going to cost to do that? Well, the cone has a cost, the ice cream has a cost, and you have a payroll to the individuals that serve the customers. And you also have startup costs, right? Before you even open the door to your ice cream, ice cream cone store, you've got to set up a lease, right? And you've got to buy an initial inventory, and you've got to do some preliminary marketing. So there's going to be some costs. And so the question that you have to have is, how much am I going to make? Now, unless you're a not-for-profit, this is your paramount goal, right? Making money. And so you need to understand very clearly what your revenue streams are going to be. And those revenue streams can come from different ways. Now, depending upon your business. So I talk about, the ice cream cone company, but maybe they also have membership. So come in and, join our membership fee and get 10% off every ice cream that you buy. So that's a relationship. How do you reach those? Well, you buy marketing, right? Or you hang up a sign. So all of these aspects, all these different boxes, they tie together, but the end result or the end goal is that you're going to want to make money. You're going to want to be profitable. We'll talk a little bit more about that in a few minutes. I love working through this with my clients because after usually two, maybe three iterations, all of a sudden the lights go on, and they really have an understanding of the meaningfulness of how they're creating value and what it's going to take to deliver that value. And they can begin to see how that translates to the bottom line. So we go through two or three iterations, and we stop at a point where we know where we're at and we have an understanding. And then I encourage them to go back to it at least every 6 months and revisit it. Why? Because competition changes, the economy changes, the environment changes, our society changes, everything changes around us. And so by looking at this as a living document, you can pivot, make adjustments to the way in which you do your business. And as we've seen, in recent months, those companies that were able to pivot and reinvent themselves based upon changes in the environment have succeeded. And the ones that have not found a way have struggled, if not failed completely. So I encourage you to, if you're starting a business, this is a great starting point. Work with a mentor, put in the mental work that it takes to figure this out, and this will give you a platform to begin to think about the potential success for your business. Love this tool. All right, so that brings us to the concepts of financials and funding. I always start with a new client wanting to start a business, and whether it's any of those three options, right? You want to know what it's going to cost to get yourself started in the business. And so this is a spreadsheet that I often use with my clients that covers pretty much soup to nuts, the kinds of things that you might find you need to spend money on even before you open the doors. Leasehold improvements is one of those things that is most interesting. So when I start with a client, for example, that wants to open up a retail store of some kind or a bricks and mortar store of some kind, I say to the client, all right, close your eyes, walk in the front door, and have a look at what you see. And everything that you see in that facility is what you need to write down. And then you need to go find out how much it's going to cost. Because when you lease a facility, for example, a retail store, what are you getting? Well, you're getting a floor and a ceiling and 4 walls, but that's not your business. So you have to invest in all of those things that create that business. And so we start with that close your eyes and what do you see kind of approach. And so you might have to have some inventory and some equipment. You might have to build a website. You're going to need to work with your lawyers and your accountants, and you're going to need to pay for licenses and permits. One of the things that most often gets forgotten in the startup is startup marketing. You can't anticipate that at the day you plan to open your doors, you're going to have a line out, standing at the door waiting for you. So you've got to invest in some startup marketing to start building some what we call brand equity, brand awareness, brand recognition, however you want to call it. People need to know that you're in business and that you're available. So you need to do some startup marketing. You're going to need to have some excess working capital because most businesses aren't going to see a bottom line profit for the first 12 to 18 months. So you're going to have to keep feeding that business in all reality to keep it going. So once we go through this spreadsheet, I say to my client, okay, you think you know it all? You don't. So add 30%. because you don't know what you don't know. And if you can conservatively anticipate another 30% on top of that, you've got a good chance of getting yourself through that first 12 to 18 months in business. So pay attention to this, work through it. It's hard, and it's rigorous. But if you, again, it will give you the sense of understanding what's at the bottom of that pool when you jump into the deep end. So, it's worth the time to do it. The other area that we tend to focus on as well when starting up a business is the profit and loss analysis. So I often suggest my clients, depending upon the industry, go out and they look for a benchmark of net profit. This particular benchmark is from a company called, geez, I'm just drawing a blank on it right now. I'll come up with it in a minute. BizStats, from a company called BizStats. And you can go out and go to the library. The Hive in Phoenix, Central Library in Phoenix, has some great business resources that will help you find these statistics and many other statistics related to your business. But this gives you a point of view on what the net profitability might be for your particular industry. And so this gives you a sense of things relative to your percentage of sales. So in this particular case, the question is, what do I need to sell? What needs to be my top line in order to achieve that net profit? Well, so if I want to achieve a $50,000 income at that bottom line, and I know that my net profit benchmark is approximately 33%, then my annual sales has to be $150,000, right? Because I need to cover all of those expense items. And hopefully at the end of the day, I have $50,000 net. Now that we know those numbers, that annual sales number, I can also go back to this benchmark sheet and I can say, well, how much should I plan to spend on marketing? Well, so 1.25% of that $150,000 needs to be spent on marketing, ballpark. So you go out and you develop a marketing plan and you see how it measures up against what everybody else in the industry is doing. Now, again, they're just benchmarks, but when you're starting a business and you're green and you don't know what your business is capable of doing, you want to have some sense of balance in terms of what else goes on in the business. So estimating your expenses are generally more straightforward. You can probably find an expense item for every letter in the alphabet, but they're pretty much straightforward. Where it gets challenging is trying to figure out your top line sales. So if I say I have to generate $150,000 in sales, how am I going to do that, right? And it gets more complicated depending upon your product mix. So again, I spend a lot of time with my clients working on sales projections and understanding the costs associated with sales and so on. So it's really important to dig into how you're going to generate that top line and what I call the go-to-market plan or the go-to-market strategy is going to be to affect that situation. All right, let's we're kind of running towards top of the hour here, so let me kind of run through these things kind of quickly here. Finances and funding. Where do you start? Well, it's easiest to find the funding from friends and family, but there's risks. You can borrow against your 401k, but understand that if you lose the money, there's going to be some risk to you and your family. Banks need that detailed business plan. SBA is available for some support in that process for helping to mitigate some of the risk, but you need to go through the detailed exercise of providing that business plan. Most of you won't get into venture capital and angel funding. That's typically for large investments, typically innovation, technology, and so on. Crowdfunding is one of the more current ways of finding money, but don't underestimate the implications from a financial and legal perspective as to what's required and how to establish the relationships of crowdfunding investors. Marketing your business. All right, so let's just jump into this and I'll try to move through it a little more quickly so we have some time for Q&A. So what is marketing, right? You're basically changing behavior by changing beliefs. And the questions you have to ask yourself is, whose behavior are you trying to change? And how are you going to change that behavior? And the way you do that is through a marketing plan, right? So the only way essentially to drive your top line is either to increase customers or increase the customer spend. And that's through a targeted and very specific marketing plan. This is just an example of some of the different kinds of marketing vehicles that are available to us. You want to pay attention to what we call the cost per action. You want to pay attention to the kinds of conversion that is occurring, whether you're changing a viewer of your Facebook post to a lead, or just creating awareness, or actually converting someone to sales. And here are the conversion rates. Again, organizations like the Hive, the Rochester, or the Phoenix Library has statistics on conversion rates for these different kinds of marketing vehicles. All right, so to wrap it up, you want to do some very serious soul searching about whether or not owning a business is right for you. Right, you want to look at all of your options to become an owner, right? We talked about the 3 different ways in which you can engage in owning a business. So don't just jump in, think them through. Get a good team of help, right? Your lawyer, your CPA, your insurance agent, the ACA, SCORE, and so on and so forth. You know, I tell people, you know, the only way to eat an elephant is 1 bite at a time, and you do that with some help. So make sure that you are reaching out to the folks that know and who are professional in the areas. We want to talk about failing to plan being essentially a plan to fail. It's worth the time to do this, to spend the effort and pay attention to the details. And I talk about the financials. You can't get more engaged in understanding your business potential than going through the financial analyses, the pro forma statements, and doing them thoroughly and doing them conservatively. End of the day, what you're going to do is research, analyze, get help, but you're going to come to a point where you have to make a decision. And the decision really can be one of 3, right? It's either going to be that you're going to realize your dream, all the numbers and the aspects make sense. You have the skills, you have the capabilities, all make sense, and you can do it. Or it's more than you want as a business. You're going to keep your day job and you're going to do it as a hobby, which is great. It'll add to your income and it'll give you something to feel good about. Or it's going to be a situation where you look at it and you go, nope, not for me. I'm going to fold up my tent and go home. Any of those 3 decisions are plausible. None of them are right. None of them are wrong. They are only applicable to you at the time that you're making that decision. So you may decide to fish and cut bait and go on and do something else, and then in 3 years revisit it again, right? So there's never a right or wrong in the decision-making process. It's really just what fits at this point in time. So that said, I think I've extended more than the time allotted to me, but bottom line here, start your research, visit greaterphoenix.score.org, sign up for mentoring, visit the ACA, and I'll take some questions. I think we've got one.
Excellent. Thank you so much, Scott. We did have an enter into the Q&A. However, it was just a thank you and great resource. So kudos to Scott. This was a phenomenal presentation. Thank you so much for your time to put it together. If you do have questions, I know we are towards the end of our presentation. Please make sure you put those in the Q&A right away so we are able to address those in this session. We will have the slides available as well as the recorded presentation on our website this afternoon. So I know Scott gave us a lot to go over. So these will be available for you to review later today. That being said, there are a number of additional resources and thoughts that Scott provided as you go through starting your business. And again, I encourage you to check out our Small Business Bootcamp website to see all of our previous sessions as they delve into some of those topics a little deeper than we were able to go into today. All right, Scott, and we are getting some questions in the Q&A. So we'll go ahead and get started. Is there any networking event in Arizona for technology businesses? So I will go ahead and answer that. If you visit the Arizona Startup Together website, that link is in the chat. Please make sure you check out that for all of the events happening in April, as well as those community partners and kind of their individual calendars. All right. So I've read ahead, Scott. So is the business model Canvas the same for someone with a YouTube-based business?
I think it's the same for any business. You know, if you're YouTube based, it's really just your way of engaging your clients in a particular way, right, on YouTube through your videos. But at the end of the day, your messaging is what's key, right? And so how are you going to promote that? What is the purpose of the videos that you're presenting? How do they solve a problem, address a want, or address a need? You know, if you're doing, you know, how to get in shape with yoga, you know, how to solve, you know, how to install a dishwasher, right? Whatever the video might be, it has to solve a particular need, address a want, and so on. So yeah, it's absolutely applicable, and it's going to make you think about things.
Excellent. What were the percentages of failure over time again?
So 75% will likely fail in 2 years. 90% will fail in 5, and 95% will fail in 10.
Excellent. Thank you for revisiting that, Scott. And our last question, due to time, and I think the best way to end this is, at what stage do you recommend small businesses reaching out to services through our SBDCs as well as our SCORE mentors?
As soon as you have a concept for your business, an idea that you think is viable, reach out and get some help, because they can help you begin to structure that, give it a context, like the business model canvas. They can begin to help you frame it out and put the edges around what might be a kind of a fuzzy business idea.
Definitely. If you are even considering a business, we recommend you reaching out to the amazing SCORE network, our small business development centers. They are great resources for you, regardless of your business stage. But due to time, we're going to go ahead and wrap up today's session. Scott, again, thank you so much for walking us all through that process. As a reminder, please be sure to check out our upcoming sessions, again, happening Tuesdays and Thursdays from 9 to 10. And we will be back next week to discuss prioritizing your marketing strategy and positioning your small business for success. So we will see you next week. We hope you have a great weekend, and thank you again, Scott, for your time. And again, this recording and presentation will be posted on our website this afternoon. Thank you and have a great day.